Silver prices just took a huge fall. The price dropped by 31% in only 1 week, and it ended up below $80. This was the biggest loss in a single day that anyone has ever seen. It was not just the biggest drop in 10 years or 50 years, it was the biggest drop in the history of recording these prices. In just one day, $7 trillion worth of precious metals like gold and silver simply vanished. Silver lost about $2 trillion of its value, and gold lost about $5 trillion. Other metals like platinum and palladium fell very fast too. I am going to show you that this was not just an accident. It was not just people getting scared and selling their stuff. This was a plan that was made ahead of time, and I have the proof to show you. If you look at the reports from the big trading market, you can see that a giant bank named JPMorgan finished their bets against silver at the exact moment the price was at its lowest point. Right after they did that, the price started to go back up. This is not a guess or a wild story. This is proof that the whole crash on Friday was planned by powerful people. When I look at the numbers, I see that most of you watching this are not subscribed to my channel. About 3 out of 4 people visit but do not click that button. If you think my videos are helping you see through all the lies and understand the money market better, please hit the subscribe button. That is the only way I know our group of smart people is getting bigger. If you feel like you are learning something real here, please type OG John AG in the comments. This helps me and my team know what you like so we can make better videos for you. If you do not like it, that is fine too. I do not care about having huge numbers just for show. I only want to talk to people who want the real, honest truth. I am not like the people on the news who use fancy words and do not really know what is happening in the real world. I want to give you the facts without any of the fake stuff. Now let me show you exactly what happened with the numbers. There is a report from the trading market called the COMEX from January 30th, 2026. It shows that a big company called JPMorgan Securities stopped 633 bets against silver. The timing of this was perfect. The price of silver had fallen from over $100 all the way down to the low 70s. At the very second the price was at the bottom, JPMorgan closed those 633 positions. As soon as they did that, the price of silver began to rise again. This is not just a guess. This is real information from official reports. There is also another big clue. Over 2,500 silver contracts were told they need to deliver real metal. People still want real silver very badly. On that same day, almost 2 billion ounces of silver were traded in paper bets. That is more than double the amount of silver that all the mines in the whole world can dig up in a year. They were trading fake silver that does not even exist yet just to control the price. Let's look at why this happened now. The United States government was getting ready to shut down, but then the Senate passed a law to stop it. At the same time, the first bank of 2026 failed. A bank in Chicago called Metropolitan Capital Bank and Trust was closed by the government because it did not have enough money and was not safe anymore. People who bet on these things said there was a 99% chance a bank would fail, and they were right. Something very big is coming. There is less money moving around in the system, and right when things got tight, the paper price of silver got crushed. It happened at the perfect time. Do you think that was just a lucky guess or a coincidence? I don't think so. While the computer prices were falling, the stores that sell real silver stopped trading. They told people it would take 8 to 16 weeks just to get their metal delivered. The real silver is disappearing while the fake paper silver is being sold for cheap. Right now, real silver in a city called Shanghai is being sold for $122. But on the computer market in America, it says the price is only $84. That means silver in China costs $37 more than it does here. Even after the biggest price drop in history, the gap between the two prices stayed very wide. In fact, people in China are paying 44% more for real silver than the paper price in New York. This extra cost did not go away when the market crashed. It actually got bigger. This shows us that the real metal is still worth a lot, even if the computer screen says something different. The people who trade paper silver and the people who buy real silver are living in two different worlds. One world is full of fear and fake numbers, but the other world is based on what is actually happening with real things you can hold in your hand. I want to talk to two different groups of people watching this. First, I want to talk to the stackers. These are people who buy silver to keep for a very long time, like many years. Most of you, about 70% of this channel, are in this group. You have been saving silver for a long time and you have a solid plan. You are not worried about what happens today or tomorrow. You look at things by the month or by the year. When you see a big crash like this, you do not get scared. Instead, you see it as a chance to buy more silver for a lower price. You might be happy that the price dropped, so you can add more to your collection. You understand that the paper market is separate from the real world. Even with this big drop, the price of silver is still up by 19% for the whole month. You are relaxed because you see the big picture. The second group of people are the short-term traders. These are people who try to make money quickly. If you did not have a plan and thought the price would only go up, this week was a total disaster for you. When the price drops 31% in one day and you borrowed money to trade, you can lose everything very fast. This is called a liquidation nightmare. Some people might have made money, but if you were not careful, this move probably destroyed your account. The market does not care about your ideas when it starts moving that fast. I have been warning everyone for a long time about the dangers of trading with borrowed money and not having a plan. If you are new here, you should watch my older videos to see what I mean. My regular viewers knew this could happen. We were ready for it because we had a plan in place. I want to remind everyone that I do not sell anything. I do not sell trading signals, I do not have a private club, and I do not teach expensive classes. My only name on YouTube and Twitter is OG John AG. If you see someone else using my name to sell you something, it is a fake account. There are many people out there who take my videos and change the numbers or tell fake stories to trick you. Please make sure you are following my real account. I am not here to make you scared or greedy. I am here to give you the honest truth so you can use your own brain to make choices. You need to decide if you are a long-term saver or a short-term trader. Once you know which one you are, you can act the right way. I always give you both sides of the story so you can be prepared for anything. Let's talk more about that report from the big bank. JPMorgan ended their bets against silver at the very bottom of the crash. Not near the bottom, but the exact bottom. Right after they did that, the price started to go up. This proves that the crash was timed and controlled perfectly. They know exactly where the bottom is, because they are the ones making it happen. They sell a huge amount of paper silver to make everyone else panic. This causes a chain reaction where other people are forced to sell too. Once everyone else is out and the price is super low, the big bank closes its bets and makes a huge profit. It is a perfect way for them to make money, and we can see it clearly in the data. This was not a normal change in the market. It was a planned attack on the paper market to take money from people who were not prepared. This sharp drop was not about real silver. No new gold or silver was suddenly created to make the price go down. The basic facts are still the same. People still want to buy real bars and coins. Big central banks are still going to buy gold to keep their money safe. There is still not enough silver being mined to meet all the needs of the world. Silver is used for many things, like making solar panels, electronics, and electric cars. These industries are growing very fast, and they need a lot of metal. This means the price should eventually go back up because there just isn't enough silver to go around. I think the stocks for mining companies will double in value over the next year once things calm down. Even though the paper price crashed, the real demand for silver is still very hot and is not going away. Think about this. Almost 2 billion ounces of paper silver were traded in just one day, but all the silver mines in the world only produce about 850 million ounces in an entire year. That means they traded more than 2 years' worth of silver in just a few hours. Meanwhile, people who want real silver have to wait months for it to arrive. In China, people are still paying $37 extra for their silver. The paper market and the real metal market have become two completely different things. The paper market is like a video game where they can make up as many ounces as they want. But the real market is where people are waiting in line for actual metal that is hard to find. The proof that this was all a plan is right there in the bank reports. They knew what they were doing, and they did it to reset the market for their own benefit. We also saw the first bank failure of the year. When a bank closes, people start to get worried about their money. They stop trusting the system. Usually when this happens, people run to buy gold and silver to stay safe. But this time, the safe assets got hit first. Why? Because the very first thing people do when they need cash fast is sell whatever they can. This is the first phase of a crisis where everything gets sold. But then comes the second phase. This is when people realize the banks are in trouble and they need something real that won't disappear. That is when the price of real metal usually takes off. We are moving from the selling phase to the finding safety phase right now. When the system starts to crack, real metal becomes the most important thing to have. Now, I have to tell you the bad news too. A 31% crash is a very big deal, and it hurt a lot of people who were on the wrong side. If you were using borrowed money, you probably lost everything. The charts look very bad right now because the drop was so sudden. Also, the big group that runs the trading market is raising the cost to trade gold and silver. They are doing this right after the crash, which makes it even harder for traders. If you survive the drop but don't have enough extra cash, you might be forced to sell your positions now. This could cause even more people to sell, which could make the price go down even more in the short term. If more banks fail and people stay worried, we might see more panic selling before things finally get better. The paper market can be very crazy for a long time. Just because silver is a safe thing to have doesn't mean its price won't go down when people are panicking. In the beginning of a big money problem, people sell everything just to have cash in their pockets. They need to pay off their debts and cover their losses. This can be a very dangerous time for anyone trading with borrowed money. Even if your idea is right for the future, you could lose all your money today if the price swings too much. We just saw $7 trillion get wiped out in a single day. There is no promise that it will stop right here. We could see more fear and more selling. This is why it is so important to be careful and not take too many risks when the market is this wild. But here is why I am still hopeful for real silver. The big bank, JPMorgan, closing their bets at the bottom is a very important sign. They timed it perfectly because they were the ones in charge. People are still asking for real metal to be delivered to them. The paper market is trading twice as much silver as the whole world mines in a year, which is just impossible. In China, people are still paying 44% more than the New York price. Usually during a crash, those extra costs go away because people are scared. But this time, the people in China are not scared. They are still buying. This shows us that the paper market in New York is the one that is broken and rigged. The people who sell real silver are running out of stock, and that means the real price will eventually have to win over the fake paper price. We are seeing the end of a big game. This happens when the paper system is about to break. The people in charge do one last giant sell-off to clear everyone out before the price goes back to where it should be. So here are the three big things to remember. First, JPMorgan ending their bets at the exact bottom is proof the crash was planned. They made money while everyone else lost. Second, the amount of paper silver being traded is way too high compared to real silver. The real market is screaming that there isn't enough silver left. Third, banks are starting to fail, which makes the whole system weak. Even though things look scary right now, we are moving toward a time where real assets will be the most valuable things to own. Stay smart, keep your plan, and do not let the big banks scare you out of your positions. In the end, you have to look at the facts and not just the noise. The Friday crash was a big shock, but when you see that a giant bank timed it perfectly, you know it wasn't just bad luck. They used the paper market to push prices down so they could make a profit. But they can't change the fact that silver is needed for almost everything we use in the modern world. The physical stores are empty, and the premiums are high because people know the truth. The paper system is running out of time. If you are a long-term saver, this is just a bump in the road. If you are a trader, be very careful because the big banks are playing a tough game. Always use your logic and do not get swept up in the hype or the fear. The real story is in the metal you can touch, not the numbers on the screen. Stay focused on what really matters.